Hey, Jeff Carlisa here from 38 Special, and we're rocking it up right here with Traders Nation.
Welcome back. You are tuned in to Traders Nation. My pleasure to have back with us once again Adam Mesh. He's CEO and founder of Adam Mesh Trading Group. Adam, welcome back to Traders Nation. How are you today?
Good, and happy to be here. How are you?
Good, good. Happy New Year to you, by the way. Hey,
thanks.
You betcha. Hey, after weeks of volatile sell-off, huge market swings, God knows we've seen them. Where's all the dip buyers? Where are they gone to? Are they just kind of staying on the sideline for right now, or what?
You know, I was just looking for trade ideas, and the biggest inhibitor right now is everything has earnings coming out. Other than the banks with J.P. Morgan and Wells Fargo and Goldman already came out, anything you look at is about to have earnings announcement. Now, there's not been a positive sentiment leading into earnings. So as we prepare for it, I think it makes sense at this point to look for the opportunity to buy a sell-off into earnings. Although, like Goldman, they expected bad earnings, and stock ended up big on the day. So earnings season is upon us. So yeah, that's a great point. So since earnings season is here, certainly we could see another step down, which offers us even a better buying opportunity, right, Adam? Exactly. And I think that's what people are thinking, is that the numbers will be bad.
Sure.
And why hold into that bad announcement? But I think because so many people are on the sidelines, we might end up chasing these stocks anyhow, because if it's already expected, you know, it could end up surprising us and shoot higher, like Goldman Sachs already showed us. Right.
So when it comes to, so we're talking about earnings, what sectors? I mean, I know retail, there's some bad reports coming out. The retailers weren't as happy as they would like to be. I don't know if they ever are. Payment processors are doing phenomenal, because the payment processors are moving money around no matter where people are buying, whether it's Amazon or a box store, which nobody's in. So there's some particular sectors that may see bad earnings reports, and maybe some others that may see good ones. Your thoughts?
Well, you're absolutely right about payment processors. PayPal has been my favorite stock it was my favorite stock of 2018, and it remains so strong and was so resilient even in the face of that down market in December. So you nailed that straight on. I love PayPal. Now, you know, a great example would be Apple. The stock sold off, I think it was like 14 points on the news that they were going to guide down. And now they're announcing earnings January 29th. So we want to see, is it worse than the warning they already gave? Is it better than expected? And that's hard to predict, and you got to listen to what they say. We got to, even me, who's a technical trader, needs to be a little bit careful and say, okay, what is Tim Cook going to say next? And that goes along for a lot of different companies. Not to mention, we have the uncertainties of an ongoing trade war and the fallout from it. You know, they just had a vote of confidence on Theresa May regarding the Brexit deal. That whole thing's a mess. I just read that the guy who's famous for The Big Short came out and said to short all English banks because you know, nobody knows what to do with Brexit. I was just reading an article about that. And then we still have the government shutdown, and I saw a stat yesterday that, as an example, Delta Airlines will lose $25 million a month on the shutdown. Now, it's a multi-billion-dollar company. But let me give you one more example. Let's go to the biotech. I was looking at a biotech. The stock traded down 20%. Here's the news. The FDA, they anticipated, because all biotechs, especially the smaller ones, they live and breathe on their FDA announcement.
They do.
They had an FDA announcement scheduled. It got postponed a month because the government shut down. Now, think about that. They lost 20% of their value just because the government's not going to meet and give them approval. How many other FDA approvals are getting pushed back? How much less? You know, this government shutdown is really bad for everyone, and it's just like, it's not just the main companies. You could be a beer company who created this amazing new flavor, and you can't get FDA approval. So everything's on hold. So
you know, that's interesting, because geopolitical events really affect the markets. And years and years ago, as Traders Nation, we were kind of like a hybrid, where we covered politics with the markets, because there really is a tie-in to the two. Politics do do direct the market in certain ways, and certainly we're seeing that right now, whereas a lot of shows weren't doing that. But it's interesting you say here, because I want to go all the way back to the beginning of Apple, because Apple was one of those stocks where you just don't bet against it. But that's changed now. Is it as a trader? It's like now you're starting to second guess Apple, and for good reason. Your thoughts?
It's funny how perspective changed, because Apple over 200 looked amazing.
Right.
It didn't look expensive. It looked good.
Yeah.
And then all of a sudden, it's in the 150s, and it looks more expensive than it did above 200 because sentiment had changed.
Sure.
But you got to remember, it is Apple.
Yeah.
They have more money than any other company in reserves.
They do.
And they could always maneuver in a lot of different ways. I would not bet against Apple, but it's a little tough for me to bet on it now. I own Apple. I have positions in Apple, but I'm surprised it went down this far. But it's hard to sell it down here.
Yeah.
But I don't want to buy any more.
Right.
It's kind of, but you got to remember, with that much cash on reserves, I don't think they're going to fall the way of like an IBM or a GE, companies that have kind of failed to adapt or run into problems. I think Apple's positioned much better, and they're always one great iPhone away from a major surge on the stock price. But I think, like a lot of things, is in limbo right now.
They really are leaders when it comes to technology, aren't they? And I think they almost create the curve instead of be far behind the curve like some of those other companies you mentioned. So I think that's probably the saving grace for Apple, but it still brings poise, doesn't it, for traders for Apple during these times. And it's like you said, I don't have Apple, but like you said, I have Apple, but I'm not looking to add to it any time until I get some more clearance on where the company's going to be heading and where their head is at, right? So, all right. I want to talk about recession and coming into 2019. I don't want to, this flattening of the yield curve and stuff like that. I don't want to get into the technical analysis of flattening the yield curves. I don't want to put myself to sleep, anyone else. But, there's concerns about recession, and kind of comes into the economy, which kind of ties into the government. Any concerns on the trader side of potential recession here in 2019? Your thoughts? Are you even thinking about recession in 2019 as a trader?
Well, I think what I'm most worried about right now is all those companies that bought back their stocks and now see their stocks at lower prices. And so, I think that overall there's a little bit of an anchor on the market with everything going on. Sure. And even if we go higher, the question is how much and the upside limited. So it is a concerning factor. I'll tell you, as the Traders Nation, my favorite kind of trade right now, I'm really high on it. I just did it, and I haven't done these a lot because I used to not be a fan. Yeah. But one of the most popular option trades for discussion is always an iron condor. Okay. And that's essentially when you bet on stocks to do not much. Right. That 65% of the time they're in consolidation. Yeah. So this trade's no good right now because Starbucks has earnings coming out, but we just did a trade in Starbucks where we put it on for like 3 weeks. Right. And we sold the 60, it was trading around 64. We sold the 65 put, bought the 60 put, sold the 65 call, and bought the 70 call. Right. So we collected $2.87 in credit. Nice. And all we needed Starbucks to do was stay within a range, $2 to $3 of that 65 level. Yeah. Awesome. And awesome. Yeah. All right. So we're out of time, unfortunately. So, Adam, where can we find you at? What's your website? AdamMesh.com. Thank you. Yeah, we have a lot of good stuff going on. All right. And thanks for being on here. Always a pleasure. AdamMesh.com, right? AdamMeshTrading.com or AdamMesh? AdamMesh.com. AdamMesh.com. Head on over there today. Adam, thanks for being with us. Stay tuned. We'll be right back. Thank you. You bet.